Shall we just talk about generally what's been happening on the markets and whether or not the markets have started to just price in all the risks in MENA, the Middle East and North Africa, the tsunami in Japan? We've seen a lot of the markets sort of trading up almost as if to say we understand the repercussions and we're planning ahead.
Yeah, I think it's a good point. I think it's also very difficult to make a call exactly like that at the moment because volumes are still very low. So you are seeing quite a lot of disparity. The other thing quite interesting to note is that often you'll see indices within one region performing very similar to each other. You know, for example, the North Africa indices will all perform well or badly, you know, and the same with East Africa. If Kenya's doing well, it tends to drag up all the others. But you're seeing a vast disparity. And for example, if you look today, you know, I mean, Egypt was amongst the worst performing, as was Tunisia. And then on the other side, Morocco is doing very well. So it's tough to say, you know, a lot of it's on bad volume. So you often get some of the bigger names, the large market caps, and if those trade up or down, you often see a large disparity.
All right, let's talk about the best performing bourses and the fact that some traction has returned to the Semdex in Mauritius, which has crossed over that 2,000 mark. Mauritius Commercial Bank up, and is that a driver of the market?
Oh, very much so. I mean, MCB is probably the biggest stock there, and I see it was up again today. You know, it was up last week. They're getting a lot of flow in. There's foreign demand. You know, everyone does still like Mauritius, the story. But then again, you know, it's getting a cash inflow from the Mauritius Union Assurance. You know, this is back to a fraud case from the early 2000s. So that's really giving a leg up to Mauritius. And the other one is Gamma Civic, which I see is again up 5% today. It was up 13% last week, and there's a lot of speculation on some M&A activity there with foreign counterparties.
All right, Morocco, as you mentioned, you know, not being convergent with what's happening generally in North Africa. Why is that?
Well, again, as I was mentioning earlier, there's very thin volumes going through, and you saw some sort of a bounce really in the bigger names, Tijari Wafa, BCP, Morocco Telecom, which are the big market caps. So it's very difficult. We don't believe it's sustainable. We think it's more technical bounce, and you know, it's going to soften, we believe, like Tunisia and Egypt have.
South Africa, the JSE, tracked by Namibia, as you mentioned earlier on, recovering. Is that a commodity story?
I would say in this case it typically is, because typically South Africa follows both commodities but also global risk appetite. And if you look at global markets last week, they were pretty much flat. So I think in this case it's more a commodity play.
I mean, also we've seen a bit of rand strengthening on a weaker dollar with the rising oil price. Are you able to explain to us what that's all about? Because obviously we know the internal dynamics about the exchange rate in South Africa, but we had thought that with signs of recovery in the United States, we weren't going to be seeing a weaker dollar. Yeah,
it's an interesting one. I suppose you could call it the million-dollar question, really. You know, there's a lot of debate around the rand. You know, is it too strong? And a lot of people believe it is, because at the end of the day, we are an export nation, and I think we do have to see a slightly weaker rand. But then again, South Africa has a lot going for it. It's being very positive, and it's still attracting a lot of foreign demand.
Okay, let's talk about Nigeria. There was uncertainty over the elections, and for a while the market dipped, and then it started recovering when we started to see the contingency plans from INEC. Will the elections have any bearing, if at all?
Absolutely. I mean, I think not only for Nigeria, but for Africa, and particularly sub-Saharan Africa, the elections are crucial over the next couple of weeks. And it's very pleasing. You know, you speak to everyone on the ground in Nigeria, and the results, the elections went well. I think it typically went what people thought it would go. There were pockets of small unrest, but I think overall it's done well. So that is really crucial, something we're watching very closely.
So investors believe that the fundamentals in Nigeria are strong, that the central bank's working well, that defending the Naira is the right strategy, that the economy will grow above 7%?
Yeah, absolutely. I think there's still a massive demand, you know, and as we've always said, you know, Nigeria is the biggest of the sub-Saharan African markets, ex-South Africa. So there's always going to be that demand and that drive behind Nigeria. People are stepping away. I mean, volumes are still quite low, but there's a lot of buy orders returning, which is encouraging.
Let's talk about the worst performers, and no surprise here, the Zim Mining Index down together with the Industrial Index. Indigenization, indigenization, indigenization.
Correct. You know, we discuss this all the time. You know, sometimes these two indices move totally opposite to each other, but in this case they're moving together, and it's indigenization, as you say. It's the politics. Zimbabwe, being a dollarized economy, does drive a lot of its demand from foreigners, particularly in dollars. It makes it easy to invest. But at the moment, you're seeing them stepping away. You know, Rio Zim and Hwangi in the mining has really hurt them. And then the bigger caps in the industrial, your CBZ, Econet, Delta, all down. Inscore taking an absolute battering. So it really is struggling at the moment.
What's the story in Tanzania? I see your notes say they move in mysterious ways.
No, well, we do a lot there. I mean, it's a beautiful country, but the market, it does work in interesting ways because there's a lot of foreign restriction. At the moment, 60% foreign can only own stocks. So a lot of those stocks are actually at their maximum. So it's very difficult to trade there. And the reason it's down actually was two of the banks had a lot of foreign demand, and it ramped up. For example, CRDB went from 110 to about 230 in basically over a couple of months, which is over double. And there's been a retracement in that simply because there's no foreign demand coming through now. So it's an interesting place.